million, 10 million. How about getting up to 26,000 per employee? Wait, what about getting up to 10 billion in grants, loans, and equity? Hi everybody, welcome in. This is Michael with Viral Funding Solutions, and as you can see, I'm actually standing for once doing this. Usually you see me sitting down in front of my laptop right here at my desk, which I'm still here, but as you can notice, I have my headphones on me. I just got done going for a walk. I came back. I'm gonna be hanging out with family. They're gonna go for a walk, so I thought to join them again. Just came back from about a 45-minute walk, hanging out at home for the time being. And I just wanted to do a quick live here, rapid fire business loan Q&A. I'll go through some questions I get frequently asked. And if you have any, feel free to leave them for me in the comment section. I may not be able to see them because I'm streaming directly in the app. Usually I'm on StreamYard. But if you do post something and I don't get a chance to answer it right now or at the end of this video, once this is done and uploaded, then I will take some time to do that. And like I said, if you're just joining me, I just got back from about a 45-minute nice clean walk. It is sunny here in Vancouver, Washington. Let me bring you guys into the backyard. I have my charger on. I just took it off. Battery percentage is okay. Now let me put this back on the charger. I didn't want to say much because there were dogs in the backyard. There were a few people next door in their backyard, putting plants together. And then I have a few people on the other side who were doing the same thing. Some of them were working on their roof. And then I had my other neighbor who was in their garage when I just got up the hill. So I didn't want to make too much noise. I was going to think about sitting there and just speaking to you guys for a bit outside, but I think this will be fine for this time. Before I get into things, I just finished coming from a walk. And again, it hasn't been this sunny here in Vancouver, Washington. Felt really good just to get out and just went across some blocks, some neighborhoods, excuse me. Went around through some traffic lights, turned around a corner, came back walking. And then during that whole time, I was recovering. And two, I was listening to a few videos, podcasts, and a few YouTube videos just to get more education on not business funding, because that's my world, but in other ways, and see what other people are thinking. But just some quick rapid fire Q&As, and we'll cover it from there. So in about 2 minutes, I think 2 to 5 minutes, because I have to get going. So a lot of people will ask me the question, how much funding can I get? And I know that comes from a place where you don't know how much you can qualify for. You don't know how much that service can give you. And it comes from a place where you have certain details, but you're not sure, how much exactly can you get. Maybe you have a ballpark number from what you've been hearing. This isn't your first time around, but the amount you can get is in proportion to the service and into your fundability details. So for example, if you're doing in any amount, you usually get 10 to 15%, if not up to 20% of your average of your annual gross sales. And in most cases, it is from 10% to 12% on average. And if you're not that average person, sure, you can get into the 12 to 15 and even above range, but you have to have exceptional cash flow, revenue, and then on top of that, credit, time, and business. And that's where the 3 C's are emphasized. That is credit, collateral, and cash flow. to get you a higher percentage. So if you're wanting some arbitrary number, if you're asking for 1 million, but you're only doing 30,000 a month, around 40, 50,000, you can only get up to 15 to 20% or up to 10 to 15%. You have to do the numbers there and think about what are you doing in annual gross sales, and then cut the percentage off and then work backwards like that. So how much you can get depends on your funding details, revenue, credit, time in business. And it goes even deeper when we start looking into the underwriting process. Once I start looking into the bank statements, if it's tax returns, and it gets more extensive from there. Another question people will ask me is, how much time in business do I have to have, right? These are very generic questions. So if you've been around this and you know, like, come on, I know the answers to these. Just bear with me. Every service is different. So you'll be required to have at least 3 months in business, if not 6 months, if not 4 months. And in certain products, they'll require you to have at least a year, but if not, in most cases, 2 years. And that's to qualify for longer, medium to longer terms. So you're seeing these commonly with the SBA 7A loans, perhaps with the EIDL loans, but they're less restricted in a sense. They come with less qualifications if you think about it that way. So like SBA 7A loans, a minimum would be about 2 years in business, but it is more of a highly credit utilized program. So you want to have great credit history, credit worthiness, and you want those reports to stand out and not say, hey, I have 20 inquiries in the last 3 months. I've been using over 45% of my credit utilization. I'm not making my payments on time. And yeah, you just have too many inquiries off the roof. Debt to income ratio is just too high. And then it goes even deeper when we're looking at the FICO SBSS score, comparing that with in the sense of business credit. So think about it that way. Those are two. Another one that I get commonly asked, and I have a few of them here, so I want to kind of look over them. Okay. The one that I want to pull from is, can I qualify for less than 3.75% interest, or can I get an EIDL loan, or can I get a loan similar to the EIDL? And my answer to that is no. Reason being is, if you're looking for a business loan, you're not going to get anything less than 3.75%. Usually speaking, you're looking at more of a prime rate, 4.75% in today's market, plus 2 to 8%, 2 to 6%, or plus 2% if we're just talking about accounts receivables. And so even if you come to it with assets like high value commercial property, rental, real estate investments, equipment, inventory, maybe there's a mix of these on top of accounts receivables, then you cannot expect to get something underneath 3%. Not even right now, in most cases, in 4%. At a time, it was that. And if you can't qualify through traditional banking means or an online banking way, then it is going to be a little troublesome for you. So just keep that on the back of your mind when you're thinking about getting funding that is around 3.75%, or you want 0% interest, which I came out with a video on how to get 0% interest for 6 to 18 months, and I'll quickly get into that. Now, what that means is it's a credit card stacking program. This is building business credit cards. This is where you're getting limits to low, medium, higher limits. You're getting corporate credit cards. You're getting into a program where it's more credit heavy and intensive. You have to have a 680 and above FICO, and that's not the only thing on all consumer credit reports. And a minimum is just not enough. Inquiries, everything else that I've been talking about in leading up to this, you have to have, if not spectacular, great if not spectacular. And if it doesn't look that way, then you're not going to be getting 0% interest for 6 to 18 months. And that's just the reality of it. So anything below 3.75% and just above that, right now in today's market, it's not going to work. And don't compare this to mortgages at 3%, 5%, 6%, wherever the market is now going. That's not what these are. Home mortgages, business loans, keep them separate. They're two different things, and they don't work the same way. They don't appreciate the same. Well, they could appreciate the same way if we're talking about the market and the property versus your mortgage payments. And then we're talking about your business. Where is it going to be in 3 years' time? Net income, your gross income, and so forth. So those are just a few aspects to consider when I'm answering that question to a lot of people. And I just made a video I'll try to link to you guys to down below in the description about how to get interest rates that are possibly 0%, like I just mentioned, one of those. Other ones, how you can get them through a home equity line of credit, cash out refinancing, private lending options, and quite a bit more. So look for those. I'll try to leave them for you down below in the description. Let me answer 2 more and I will get going. Let me pull one from here. Okay, that's a good question. I want to answer this one. Have it on my list. How do I get monthly repayments? So not a lot of people understand how they can get daily, weekly, monthly, but a lot of people will ask me, how do I get a monthly repayment? Because they already know what is out there. Maybe they know what they're going to get approved for, what the expectations are, and so forth. The way you get a monthly repayment, it's not like an idle loan. Everybody's expecting to get a monthly repayment because they see the PPPs, the idle loans, it's all doing this, the advanced grants, and so forth. And you're thinking to yourself, well, every other private lending option or every other option on the table should be a monthly repayment. And yes, there are monthly repayments. There are unsecured term loans. There are asset-based financing solutions, and plenty of more. But if you don't have the core fundability details that we are looking for, the lenders, the underwriters, the brokers, myself, and everybody included, then you're not getting those monthly repayments. I have people who've been emailing me every day. Yes, I want to move through with something, but I need a monthly repayment. Well, first and foremost, I know like how you would collect your payments. Are you collecting them weekly? How are you getting paid on 30, 60, 90 terms, day terms, and how you're collecting those payments? How are your customers paying you back? When are you invoicing them? When are you collecting those payments? So it's not all about a monthly repayment if you can't adjust to it. You have to think about what type of service am I getting? Am I getting a term loan with 1 to 2 years? Perhaps that's a monthly repayment. Am I getting from 3 to 12 months because that's what I can actually qualify for? Or a line of credit where I'm expected to pay it back weekly, if not monthly? So some of these are daily, some of them are weekly, some of them are monthly. It just depends on the service, what you can qualify for. Like SBA 7As, you're looking at monthly repayments, lower interests, lower costs per month. And then the other services where there may be more of a medium to higher rate, and it may be more that you need to make a higher calculated risk, and understanding that if you take this funding, is it going to help your business grow and expand, or are you using this money just for survival? And if you're using it for the two, where will you be in about a week's time, in about a month's time, in about a year's worth plus? And what is this funding being allocated to? You have to really understand that, because I'm going to put it at this. It's not always about the interest. It's about, not even the term, it's about the benefit exceeding your repayment. If you can have your benefit exceed your repayment, if you can pay your repayments back on a weekly, even on a daily basis, the way you're asked to pay it back, otherwise you won't get the funding. You're going to just continue to price shop. You're going to be interest shopping. You're going to be looking for somebody, well, they offered me 9 months, I'm going to see if I can get 12 months over here. That just doesn't work. And if somebody does that, it is a suspicious lender, underwriting team, broker, over promising, over delivering, under delivering, overwhelming you at the end of the day, because they're just trying to look out for themselves, just trying to make money for the company and stay afloat and please people. And that's just not how this works. So keep that all in mind. And the last question I'm going to leave you guys with: how do you get a hold of me? I get that question just about every single day. And I'll say this, if you've already heard me, stick with me. The best way to get a hold of me is to fill out a questionnaire. It should take you no longer than 30 seconds. You fill it out, and then I will be able to evaluate, analyze your response, and give you a proper email response back on your best funding option and options. Very thoroughly broken down from the intro all the way to the conclusion. And I'm going to leave that for you down below in the description. You might not see it there right now, but I'll update it when I get back from my walk or sometime later today or tomorrow. So bear with me. But that's the best way, so I can assess and I can see in the front what you bring to the table. If it weren't that way, I'd have to be getting on a phone call every single second of the day. And you know very well that I can't be doing that. I can't be allocating that energy and the time like that. Maybe a company who has to be given an assignment to call 200 to 300 people a day, I don't do that. So I'm going to leave it at that question. I know there's more that you probably want to get answered, but these are very common ones. And over time, I'll continue to try to do these and give you more responses and pick out more questions, because there are a lot of them, like what terms, more about interest rates, more about the different types of services, your specific scenario, because everybody has a different one, but these are a lot of the most standard and generic ones. So that'll be everything from myself. I will talk to you all soon. I have to get going. See ya.